Good morning, people. Happy Wednesday to you. Welcome to Business Mastery Live Wednesdays, wherever you are chiming in. Good to be with you this morning. About to get started right now. Okay, guys, welcome. Good morning. It is Wednesday, May 10th, 2023. And I keep saying this every week, man, and this year is filing by fast. And we want to check in and see where we are inside of business, inside of life. So I was on a conversation the other day talking about just when to check in and see where we are, where do we stand reality wise inside of the finances for our business? Do we win our game or do we not win our game? Are we winning our games or are we not winning our games inside of what we do? And it's real critical to check in on a regular basis, daily even, to see where we stand inside of our business and the goals that we have for it and the mission that we have for it, and check in on our overall life missions to see if we're on track with those as well. Right? If we don't keep this in mind daily, daily, man, daily, then we're fooling ourselves. Right? You're not living in the reality. You're not bringing things out here into reality. And there's always a game that we're playing. You just got to be present to which game it is that you're playing. All right. And I choose to play the game of having business and life work. And I hope you're here to do the same thing. That's why we have these conversations. And that's why I'm excited to be here with you every single Wednesday to deliver these talks and these conversations and bring hopefully practical methods and concepts and actionables to you each and every week. Okay. So with that being said, if you didn't know, now you do. This is me, Cheston Bulgin with By the Books Consulting. And there might be a little bit of a lag here. It looks like I'm having a delay on this presentation. So bear with me, guys. Okay. Make sure we're good with this. Back that up. Bring this up another way. While I'm doing that, just chime in wherever you are. If you want to send a message in the chat, just let me know where you're coming from, where you're watching from, um, what you're looking to get out of this conversation. Definitely glad to be here with you today. Okay. All right. Okay. One more second, guys. We'll be right up. There we go. All right. So hopefully you can see that, guys. All right. So if you didn't know, now you know. This is me, Cheston Bulgin, senior consultant at By the Books Consulting. And you can reach me by email, probably the best way, Cheston at bythebooksconsultants.com. You can also call the main line 888-4BTB now. All right. And this is our website, bythebooksconsultants.com, or at youraccountingsuperhero.com. So peace, ease, and clarity is what we deliver. Right. We want you to have peace, ease, and clarity around your business systems and how you run your business. By the numbers, by the books is what we call it here. So we specialize in doing that with accounting and QuickBooks Online, the software that helps us produce real clear visuals financially about what you're doing in your business. We do tax planning as tax strategy. I also do the tax filing and compliance services over here. And we also do operations consulting. Okay, so that's what we do. And a quick disclaimer before we get started, the following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. And when we're in these conversations, this is what I would like. I would like for you to send me feedback. If you're gonna, some of you guys are chiming in from YouTube. If you want to leave a comment on the live feed in YouTube, you can do that to say, "Hey, look, I really want to talk about this, Justin. How do I get over this issue in my business?" It could be, financially related. I know cash flow is an issue for a lot of people. How to manage cash flow? A lot of the time, it's after the fact. So we're actually coming from behind in situations. If you're a small business owner, you're just getting started in your business and you've already made some choices that cause you to be behind in cash flow, and it seems like you can never ever catch up. These are things that make the difference, and we will have that conversation about cash flow and what it looks like, and so that you can have proper planning around it. All right. Sometimes you just don't know how to plan for these things. Well, what is it that you need to do to take into consideration when you plan to capitalize your business and have enough cash flow, the lifeblood of your business, and have it work? Right. So some things like that. Maybe you want to understand, well, how to create systems in your business. I was on a call with one of my clients yesterday. He was like, "Man, you guys are always creating new systems in business." I was like, "Yeah, we do that because it's important. It's important to create new structures and systems in business so that they support everything that we're creating in that next level." So if your business wants to be at another level beyond where you are, then we are constantly looking to build those structures to support the future of the business. All right. So you want to understand those things too. So we can bring those conversations to this call on Wednesdays as well. And you can do that. You can actually chime in and leave a comment on our. If you're in the mastermind group, you can leave a comment or a chat in the chat of the mastermind group. You can also send me an email, or you can hit me on IG or LinkedIn. Okay, so we call this 10-figure business mastery, right? And it may be out there for you conceptually and where you are. Some of you, you might be close to that and maybe beyond 10 figures in your business. There's so many people at different levels that chime in and watch these. So if you're just getting started out, if you're not really in the near the ballpark of 10 figures, there's a reason that this is 10-figure business mastery. We put something out here to stretch us so that we can actually have a target in mind for for our day-to-day activities. So what am I walking forward toward? What am I walking toward rather, right? Every single day. If you're in this group, then this is the target. It could be whatever level that you want, and this target here is sufficient for you to actually have a direction for your business and your life. And we're going to actually be in the conversation of what it looks like to create those step actions to create systematic systems inside of your business to support this. Okay. This is something that should light you up, is what I want to say. In order to achieve this, there are pillars on which we stand. These are the tenets of this group that we have, and these webinars that we deliver. Okay. And one of these tenets is rather intentionality, which we also call mindset mastery. Okay. If you don't have the proper mindset, then you're done before you start. Is what I want to say about that. You are done before you start. So it's very important to have the intentionality inside of what it is that you're up to. Otherwise, this world is full of distractions. You are full of distractions in and of yourself without any external outside influences. So without this thing we call mindset mastery to bring it back into focus, like what am I here for? What is the intention that I'm serving here? And then you're going to be spinning your wheels all the time. It's going to be a back and forth, up and down, never getting anywhere type situation. So you definitely want to be in the process of living in this intentionality, mindset mastery. Financial mastery is another tenet we stand on. So this is the reality of things. I love financial mastery because the numbers tell the truth. You can always see when something's not adding up. It's not something is missing, or when the activity is reflected in the numbers. It's like, okay, this is just flat. This is reality. This is what we've done up until now. Now what? This gives us access to changing the game through next level actions. All right. For example, if you understand that your sales were $1 million last year, but your intention is to have $5 million in sales, it's like, man, we need to up this, 5 times what we're doing. So how do we do that? We can actually look at the areas of business that performed well, ramp that up specifically to achieve the next result, which is to get to the $5 million mark. And it is that simple, right? So you can look at all the activities inside of certain components of your business to say, okay, we did well here. This is where we won our game. Can we actually focus here and increase efforts here tenfold so that we can get that result that much faster? Financial mastery. It also helps you understand, like, well, when is it really? Is it when is it I'm winning my game? Sometimes you don't even know if you're winning your games because you don't have the financial mastery. You can't really understand what the numbers are telling you. And you want to have this. You want to be able to take a quick glance and understand what you're looking at so that you know if you're winning your games distinctly. And you want to do this fairly quickly. Structures. All right. This is great because all businesses rely on systems. Now, systems are what make the world go round, and this is what gives you leverage in life to be able to produce massive results. So, this is another tenet on which we stand. All right. So, we want to be inside of this conversation called system mastery, which are structures. And then the last tenet, last but not least, are actions, which is execution mastery. Greatest ideas don't mean anything without execution. We want to be able to consistently and reliably execute day in and day out on the things that we say we're up to in life. And that comes down to actions. What am I doing today? Right. So we want to be in the mastery of this. All right. So these are our tenets for the business mastery. All right. So if you didn't know, now you know. All right, so we've been in a conversation all year talking about driving forward in 2023, and the main conversation that we've been in is called structures. Okay, so today, we talked about S corps last week. We jumped over to S corps last week, and the week before we talked about S corporations in terms of a structure and what that looks like and how to use them. Today, we're going to pivot back into sole proprietorships, right? Um, so if we're looking at a sole proprietorship, it's what we call and a single member LLC. All right, single member LLCs and sole proprietorships are pretty much the same thing. we we covered last week what it meant to be a disregarded entity, and that applies here today because single LLCs, single member LLCs, they're disregarded in terms of tax treatment or how the IRS looks at it. So basically, what that means is that there is an underneath um, X-ray vision that the IRS has for LLCs. They want to determine how to treat it tax-wise. They look underneath that LLC to see how it's set up, whether it's going to be a sole owner, sole proprietor type owner, or if there are multiple members to that LLC, then it's going to be treated as a partnership. Okay, so that's what it means to be disregarded, and we're going to talk a little bit more about that today as we get into sole proprietorships. Because I think a lot of business owners, like especially in the beginning, we form LLCs and go out here and do business, and we don't really think about the implications of it. We just know that somebody told us we needed to do an LLC, but you really want to understand why. You really want to understand like how your business is set up, because it does make a difference in terms of how much money you get to keep, in terms of your exposure to liability, in terms of how you're going to operate as a business. So these things we want to understand from the jump so that you're going in with your eyes wide open, and the choices you make, the actions that you take are actually giving you the results that you want in business. so so an LLC, number one, it does provide protection. That's the purpose of an LLC structure, to provide the protection. And the protection is only as good as how the LLC is operating. The protection is only as good as how the LLC is operating. Okay, what do I mean by that? Well, if you're a business, an LLC, you're setting up we call this a separate entity. Now, entities are interesting. They're actually separate beings altogether. It's like you gave birth to something else, almost like you give birth to a child. All right, so it's really separate from you. It's not the same as you. It's different. It's separate. The thing is, and I'm talking about the LLCs. We'll kick back to sole proprietorships that are not structured with an LLC, and we'll see the difference here. Okay, but when you form an LLC, it's separate, and it wants to actually operate as such. It's a tricky concept for a lot of small business owners who are just getting into this to understand. So I'm speaking to you specifically so that you can really get the understanding of running your business and getting out of it. Like, especially if you have an LLC, getting out of the LLC, the full benefit of it. All right. So if you're not operating your LLC as a separate being, separate entity, there's no distinguishing that business from you, then you're not going to get this protection that the LLC was designed to provide. So what does it really look like to run it separately? Well, I have a separate business account for it, of course, business banking account, like checking account, savings account. All the all the transactions and all the money flow goes in and out of those separate accounts. Right. I'm not paying any personal expenses from those accounts. Right. So I'm not going to take money from the business account and pay for my home mortgage. I'm not going to do that. Right. That shows like there's no separation there. I am going to actually record, whatever decisions the business is making in minutes or some type of notes, understanding that this is a separate activity for the business. um, Anything that you can do in terms of journaling to let others know that this is a distinguished business act rather than a personal act. Now, specifically, if you're a sole or single member LLC, right? So you want to really hash out, well, this business is actually a business separate from me. It's not me. The most basic way to do that is in the financial transaction activity. Okay. So yeah, you don't want to have your personal account and spend and pay for business expenses with your personal account. You don't want to have your business account and pay for personal expenses with that business account. All right. You want to make sure that it stands on its own. So if you have, let's say you have money that you invest into your business, that money stays into that business. Now this is a distinct act. You're actually injecting money into your business and you're investing. Like, it's called equity injection or capital injection from you personally into your business. And you put this into your business account, or this could be maybe you have a piece of equipment like a vehicle that you want to contribute or donate or invest into your business, not necessarily donate, but contribute as equity into your business for it to be used for business purposes. Okay. That wants to be clearly hashed out. Like, you say, okay, we're actually going to contribute this business to market value. We're going to contribute to this business, this vehicle. The market value of this vehicle is, this amount of money. And this is, now dedicated to business activity. Clearly, you want to have a transaction where you say, okay, I'm writing a check if you put a check on this, if you write a check, you put on the memo, okay, this is owner contribution to the business, which clearly defines that this is an investment that you're making into the business. The more you do these things, the more you're able to maintain the integrity of the structure of the LLC and have that protection. And it doesn't necessarily just stop serving you there. It serves you in the way that the effectiveness of your business goes. So if you're actually starting like that from the beginning, then it creates really sound habits for you in the business, so that you can see and distinguish what's happening in that business versus what's happening personally. So you can go in and, with a microscope, and analyze, okay, what happened here? And how can we improve what we're doing? How can we get to the next level in what we're doing? So hopefully that makes sense. I wanted to spend some time there in explaining that, because it's important to understand, like, you just don't want to go out there and create an LLC and think that you're good, because you will get sued, and a halfway decent lawyer will be able to pierce that veil of protection for the LLC if it's discovered that it's not treated separately than you. And it could be as simple as you going out to a restaurant with your family and paying for that meal with your business account. Oh, and they say, oh, look, this is he's just using this business as an ATM. This is not anything separate from the individual. Excuse me. Okay. Now, for tax purposes, let's talk about that. There's no recognition by the IRS for a specific tax treatment of an LLC. Okay. So basically, what that means is that the IRS doesn't look at this LLC for anything tax wise. It says, okay, how is it set up? Is there one person in it, or is there more than one person in it? Okay, this is how we're going to treat it based on what we can see. So if it's one person in it, sole proprietorship is what we're talking about today. If it's more than one, it's going to be partnership. Okay. And we talked about this thing here, flow through treatment, like flow through entities, um, and pass through entities when we spoke about S corps last week and the week before. And this is what epitomizes it right here, like flow through, pass through. The sole proprietor aspect means that all money that the business makes is your own if you're a sole proprietor. This is on the income side. Now, even though, and let me get rid of one of these screens here, guys. This is a little distracting here. Get rid of this. And there we go. Okay. Just want to make sure you're able to see my screen here too, guys. If you're chiming in from one of the platforms here, I just want to check in and make sure you're able to see my screen that we're sharing all this and the PowerPoint. Boom. Okay. Yeah, I'm gonna bring that back up real quick. And there we go. Gotcha. All right. So back here with flow through entities. And thanks guys for bearing with me on that. So basically, if you're a sole proprietorship, all the money that you make inside of the business is your own, which is the epitome of flow through. Like whatever the business income is, it's the owner's income. Okay. Um, whether that's in partnership or multi-member LLC or even an S corp, they're kind of the same thing, right? This income belongs to the owner, and this in the terms of flow through or pass through, it is the same concept rather, right? Not necessarily distinctly the same exact thing, but in terms of flow through, pass through, the thing that you want to know is that the income of the business belongs to the individuals who own the business, and there is no separate taxing or separate accounting for tax treatment of the business itself. Okay. Now we're talking about what a sole proprietorship is distinctly. This is someone who owns an unincorporated business by himself or by herself. This is found on the irs.gov website. All right. So if you're a single person, you start a business that's not incorporated, then you conduct a business out with other people or other businesses, then you are a sole proprietor by definition. Now this is going to be a single owner. All right. Now for tax treatment, sole proprietor, this could be also what we talked about before, the single member LLC. Right. So they also treated the same tax wise. Now the difference is that this has the structure of an LLC. All right. It's not necessarily unincorporated, but it's a limited liability corporation. and still considered to be a sole proprietorship if it's a single owner. Okay. Here's some benefits to it. Okay. Simplicity is a big deal. Like, if you don't like to complicate things, you want to keep things as simple as possible, then it's good to be a sole proprietor because there aren't any real complexities operating. You're just going to have, your day-to-day activity that you're going to do. If you can maintain a separate accounting, like a bank account, to make sure that if you're going to set up an LLC, then you can do that, and that would be as complex as what you get. And you don't even have to do that if you don't have an LLC, if you don't have the protection there of that structure. You can have a business account in your personal name. Some people do that. I don't recommend it, but it does create somewhat of a simplicity of operating. It just pay you for the job you do, and then you move on. All right. And the autonomy. This is one of the things. This is one of the reasons that people get into business, is because they want to have the freedom to be their own boss and do what they want to do and be autonomous. I make the choices. I do what I want. Boom. And there's power in that, and there's a relief in that too, because now if you're doing well for yourself, you can go out here and just keep doing this sole proprietorship indefinitely, and just have the freedom and flexibility to do how you do, as long as it works for you. Okay. There are no shareholder obligations, and there's no annual meetings. So a lot of times when you have multiple owners, like shareholders for an S corp, then you're obligated to report to the shareholders and the performance of the business. Even especially in C corps, when you're actually obligated to profit in your business, and you want to report how well you're doing in the next steps, next actions that you're actually going to take to perform the next quarter. Right? There's nothing like that for you inside of a sole proprietorship. Okay. So these are the main attractive things about, being a sole proprietorship. You kind of just do what you want, and it's very simple. Now, here's some pitfalls to look out for when you're operating like this. Right? This is unlimited exposure to liability. So if you don't have an LLC set up, or you're just a regular sole proprietor, then your personal assets, your individual assets, are at risk. So if you're asset heavy, like if you have a lot that you've accumulated over the years, and you're going out here and operating as a sole proprietor, not wise to do. All right, that's something that you definitely don't want. If you have anything of worth when you're operating as a sole proprietorship, you want to reconsider. Okay, because now you're unlimited. You have unlimited exposure to whatever the business is doing. It's going to impact you individually. Like, your personal assets are at risk. Yeah, think about like your family. Everything that you and your family have worked to put together. You're putting that out there. If you don't have any type of structure outside of a sole proprietorship, okay, and you may be asking, well, I have insurance. Yeah, yeah, it's good. And like, even as an incorporated business, you want to have insurance and liability coverage. Here's the difference, though. Like, what happens when the insurance company doesn't pay um, what the suit is requesting, or the suit is more so than what the coverage is, or for whatever reason the insurance company doesn't want to pay? It's like inside the stipulations of the contract to say, hey, look, we don't cover this. Well, then they're going to come after your personal assets, right? You're going to be hanging out there. Okay, so that's one of the downsides to this. Uh, s- Self-employment tax, unlimited exposure to self-employment tax. So you're going to be spending a lot more in taxes. If you're making good money with this, you're going to be spending a lot more in taxes. Okay, as a self-employed individual, sole proprietor. Okay, and I have here no real tax advantages. There's some advantages to being a sole proprietorship tax wise. We'll talk about a couple, like one of those things, really, in the next couple of minutes. All right, and but really the concept you want to get is that it's really basic. You're exposed tax wise. You haven't done anything to mitigate that exposure as a self-employed individual sole proprietor. Okay. Now, the other thing here is, we talk about left quadrant focus. Um, so if you're not familiar with cash flow quadrant, Robbie Kiyosaki, you have his book Rich Dad Poor Dad is the thing that he came out with years ago, and decades ago now, right? And he talks about the cash flow quadrant and being on the left side of the quadrant versus the right side of the quadrant. So left side is more so the people who are employees and self-employed individuals or specialized business owners. And the right side is being business owners, like B quadrant business owners and investors. So yeah, think about it. You got ES, BI. ES is on the left side, BI is on the right side, and there's not a whole lot of leverage on the left side of the quadrant to really grow wealth. So if you can imagine this, the left side of the quadrant causes you to work a lot harder and not get as much, and that's the life that you're setting yourself up for by being a sole proprietor. All right, so how do we use this thing? It's good to start like in the beginning of your business if you want to get a business going. Like if you have an idea, a concept, you're a landscaper, you go with your hands, you want to do some construction work, or you have a technical skill like electrician or something like that. You're just doing jobs on the side, and you just want to get started to make some money. Okay, well, it's good to do this. All right, there's no issue with that. It will bring you extra money that you can put in your pocket, and then you just want to make sure you understand what the obligation is tax wise come April. Okay, you want to actually manage that throughout the year so you understand what it is that you owe. And usually you want to put it aside every quarter, based on your profitability. And a lot of times you have write-offs against what you're making, so you're not going to have that much profitability in the beginning, which means that you're not going to have that much tax liability anyway. Okay, but you want to understand what it looks like distinctly for you. And so it is good in the beginning. You can hire your children too and write it off as a sole proprietor. Can't really do that as an S corp. You can do it as a partnership, but you know it has to be more than a 50% or more partner to hire their kid inside of that partnership and get a tax benefit from it. Okay, but it's one of the real benefits of being a sole proprietor is that you can hire your children and get a deduction for it. All right, so you will still want to run it like a business, like we're talking about before. You want to have the separate accounting. Is just good practice, good habits to have. And then you also want to lean heavy on general liability insurance. Have a lot of coverage there if you're going to be a sole proprietor, because you are going to be exposed. All right, and you want to consider if you're a sole proprietor, and if you're here in this conversation, you already are in the conversation of structure, creating an LLC. You have a business going on, so you definitely want to have some type of structure surrounding your operating as a business. All right, that just adds that layer of protection. As long as you're operating it as a business separate than you, then you can have that corporate veil, that protection, that veil of protection rather. So when is it good to use and why? Well, if you have a business that sells, and like the same thing as an S corp that we talked about last week, if you're actually earning this income, I mean, this puts you in the category of sole proprietor. Like if you by yourself, you actually are going out there providing a service or selling a product. This puts you in a position of sole proprietor. Okay, and then if your net income is under 30,000, okay, this talked about cost benefit of S corp last week, and was like over 30,000 is when you want to start considering an S corp. But if it's under 30,000 annually, then you want to stay sole proprietor because you're not really exposed so much to the self-employment tax. Okay. Now, if you're incorporated as a single member LLC, by default, this is how you're going to be treated. And then if you really want to keep things simple and you don't want any complexities in life and you're happy with working until you retire, like you're good with working with your hands. If you're like a construction person, a contractor, you're good doing this work until you're no longer able to do it and you're stacking money away. I had a guy, a photographer guy I know, he's been a sole proprietor for his entire business career, and he's been in business for 5 decades, and it works because he's able to get money stacked away in retirement and get that deduction for it. The um, pre-tax deduction for retirement savings, and he's not necessarily breaking the bank when it comes to self-employment tax because of it, right? So he has his write-offs and everything else, so it can work. And he's actually working that business himself. He does all the work himself. He's had employees, but not so much. And so he's making it work. It works for him. Okay. So, what about protection again? We're just going to recap this. There's no protection. Just to make it clear, if you're a sole proprietor, you have no protection, right? Unlimited exposure to liability. And if you want protection, you want to form an LLC and have general liability insurance coverage. Okay. With that being said, we're going to wrap this up, guys. Um, I'm hoping that this conversation has shed light on, whether or not you want to stay as a sole proprietor, if you want to be in this situation, or even if you understand it now, you can see how you want to make the jump to something else. All right, yeah, and hopefully this is what was delivered inside of what we discussed here today to give you access to those next levels. Now, if we're in the conversation about leveling up in business, you don't want to stay in a sole proprietorship. I'll just say that. You want to look at other structures. You want to look at forming partnerships. You want to look at forming an S corp, in some cases C corps, right? Because this is going to give you that capability to step up inside of business. All right. Hey guys, with that being said, we are complete, baby. It's always a pleasure to be with you. All right. We are doing a mastermind, guys. We actually having a mastermind program, membership program. We'll be coming down the pipe with that, letting you know how to get access to it. So inside the mastermind, we'll be talking about, yeah, things like this, but more so specifics, like how to grow your business distinctly in whatever industry you're in. Actionable tactics to do that. One-on-one coaching is going to be available. Look at the finances if you don't understand the numbers story. We'll look at those things. Right. So it's going to be a lot involved with this mastermind. You get access to all of our boot camps and webinars and workshops that we do. So I'm excited about that coming down the pipe. So if you want to get involved, yeah, you know how to reach me. All right, guys. Have a good one and talk to you later.